Hey, everybody, thanks for joining us. If you're thinking about buying a home this year or wondering how rates are going to impact your plans regarding real estate, this episode is going to save you some time, some money, and certainly some stress. So, I am here with Stephanie Kruckenberg, and she is going to help us walk through this conversation of the mortgage as a mortgage broker who's helped families all over Central Virginia and well beyond that. But specifically to this conversation, getting into homes here in the greater Lynchburg area. And we're going to break down what's actually happening in terms of how rates are impacting home buyers, how that reflects in terms of affordability, and what the smart buyer moves are right now. So, Stephanie, thank you for being here. I appreciate your time. And before we get things rolling, I just wanted to get a little bit, if you wouldn't mind sharing some background as far as how you got into lending, what attracted you to this business, and a little bit of where you come from.
Thank you, Adam, for inviting me. I appreciate it. I'm Stephanie Kruckenberg. I'm with Fidelity Direct Mortgage. I've been in banking and financing since I got out of high school. Local bank had an opening in the teller line. I took it, realized, well, yeah, all right, I like banking, but I don't want to be a teller forever. So then I took a position in loan operations. And this was back in the day when the president would walk down with his piece of paper and say, I got people sitting in my office. I need this loan, and you type it. And they'd stand behind you watching you as you typed it. No pressure, whatever.
Yep.
And I was enjoying that, but knew I wanted to do more than just be an assistant. They moved me to the assistant for the loan officers. And I knew I wanted to move to do more than that. And I got the opportunity to go to be a loan officer. And that's where I started learning consumer loans, small business loans. We did construction loans. We did airplane loans. We did student loans. And I got my hands in all of that and loved it. And then one day, a bank I was working at, they brought on a guy to start up a mortgage department. And I would coordinate with him to help his people restructure their finances so they could qualify with their debt to income ratio. And then one day he walked in my office. He's like, hey, Stephanie, I got a position open. It's a mortgage originator, fully commissioned. You wouldn't be a loan officer salaried anymore at the bank, but if you want it, the position's yours. I was like, but I took it and I've never looked back because I love that every deal is different. Consumer lending gets boring for me. So every situation, every client situation is different. And you look at the whole picture, what program's best for them? What do they need help with? How do you get them there? I love working through that. Currently working with a client who started with an online lender with a pre-approval and then got frustrated because he can't get a hold of them or get anywhere. And the realtor brought them to me, and actually they weren't really pre-approved. They needed a little help, but we got the help. We got them lined up. We're going to close on time.
Awesome.
But that's what I love about mortgage lending. It's just looking at the whole picture, finding the solution.
And did I hear you correctly that you were doing airplane loans?
Yes, I did hear.
I will tell you that's not something I've heard before in terms of talking with folks who are in the lending side of things, where they're saying, "Oh yeah, I got into the mortgages because I love houses and helping people." Like that's the typical cliche of why people get into real estate. I love houses. I love working with people.
So we put them together. I worked at a bank.
Yeah.
There was a private airfield by there, and pilots I was in Illinois or Chicago would live in this community. And the airplane, the guy that had the field decided he was going to extend that, let some of the property develop into homes. And he was selling the homes to, well, anyone could buy them, but specifically targeted to the pilots. And then they had to build a exterior finished hangar, and he extended the runways to the homes. So yes, I did construction loans. We did airplane loans. I even did a yacht loan for a yacht that was built in Europe for one of our clients who had then brought it here through Florida and then up to Illinois. So my lending experience was not boring. I did more than consumer loans. I got to do a lot of different types of financing, loved it. And then took a step out, started my family, and decided being a mortgage loan originator, you got to be available beyond 9 to 5 or you're missing it.
Not banker's hours.
Yeah, I stepped out, became a full-time mom, homeschooled. We started doing real estate investing, picked up 11 rentals, doors, single families to 4 families, fixed and flip, love fixing and flipping. We buy some really nasty houses and sometimes gut them. And so, yeah, ton of fun. I love finance. I love helping people accomplish their goals. I tell people home buying is like running a race. You
Mhm.
don't get to the finish line without taking steps. And sometimes with first-time home buyers, we just have to sit down and lay out the plan, like the savings strategy, the credit fix strategy. But home ownership builds generational wealth.
Mhm.
It's your largest, for most people, it's your largest asset. And let's get into home ownership. And you buy that house, you lock in that purchase price, and if rates are ever better, then we can refinance it.
Mhm.
But people who sit on the sidelines thinking, I'm going to wait till rates are better, they're missing it.
Yep.
Um,
Yep. You can't. They say you can't win the game if you're not in the game.
oh, you're
And
missing out. You,
despite what prognosticators like Grant Cardone may tell you, that the net worth of homeowners is 40x greater, 40
or
times greater than that of
yes,
renters.
I tell my
So
clients, when you make your rent payment, it's like pulling money out of your pocket and lighting it on fire.
mhm.
You're paying
Yeah,
100%.
yeah. If somebody's telling you not to own your home, it's because they want you to take that money that you'd be putting into your own home and investing
Pay
in
theirs off.
somewhere.
Yeah, you're paying it there. Yeah, you're paying
Yeah,
somebody else's property off.
yeah.
Like
That's
stop.
right.
And when you retire, what's your plan when you retire? You're going to rent when you're 81, or are you going to have a home that's paid off and you only have taxes and insurance because your income's going to decline when you rent. So it's a long-term strategy, and homes appreciate. You're building your net worth. Don't wait. Get going.
So I love that you're coming from the background where you have actually invested in several properties as well. So were you buying those as to rehab, fix and flip, or were those like cash flow longer term? Uh,
Both.
okay.
We liked nasty properties because
Mhm.
a lot of people back then didn't have a vision beyond it or would see mold or other gross things and go, ugh. But no, we'd buy rough properties, fix them up, rent them, rough properties, fix them and flip them. To me, I'm a huge fix and flipper fan. I love it. There's a lot of also private financing for that. That's my biggest competitor in the area for me to do fix and flip
Yeah.
funding, but I also can step in at the end and do the end loan when they convert it to a long-term rental.
Mm, that's really smart. Yeah, that's I think a lot of folks in this business they approach what we do in theory and how they've read it in books, but don't actually have that background experience as having actually invested in real estate. So the benefit of working with you is your perspective and experience that you bring is so broad, but also it's experiential that you've actually done it. So
Hands on, did it.
yeah. So if somebody's coming to you as a first time buyer, you've done that. So you can walk them through. If they're looking
Yes,
to invest, you've done that. So you can walk them through. If they're relocating, hey, guess what? You've done that. So you can walk them through that.
yes,
And also with one of the things I picked up on when you're talking about when you're going out on your own and you're no longer a salaried employee, there's a whole different series of requirements that are involved with being able to get a pre-approval, being able to get financed for purchasing that home, which is such a critical piece of beginning the journey of building your financial freedom and that independence. But it does start with home ownership.
yes.
And I know that from the perspective of, we're very similar in that we come from, we don't have jobs. Like we don't punch a time clock knowing that we're salaried. So in essence, we have to, go leave the cave, kill something, bring it back. And if we don't, like our families don't eat. And so that's just the reality of it. But knowing that we have a partner that can help similar clients who are in similar situations still be able to find success is really fantastic. So, what are you seeing right now as far as over the last 12 months? Are there any changes in the market from just in terms of dynamics or affordability or things like that from this time last year versus?
Absolutely. Rates are lower than they've been in 3 years. We expect a downward trend with bumps. However, you have to realize other countries, what goes on in other countries can affect us. The biggest story I like to tell people is the people who weren't locking a rate and were under contract, the night they went to bed and they woke up in the morning and Russia went into Ukraine,
Mm.
the markets went wild. So there's just things everyone can predict, lay out expectation, what's going to go on, but we don't know what's going on in other countries, what's going to pop up, how that's going to affect us. It's all about affordability. That's our key word. When I talk to a client, it's all about you got to take rate out of the picture. We can't control the rate, but you can focus on that payment. What's in your budget? What can you afford? Then we take that payment and then we can back into a purchase price. You have to understand when you buy the house, you only have one chance to buy that house. That's your purchase price. You're done, you're locked in. When you take your mortgage and you lock in your rate, you're not stuck with that rate for 30 years.
Mm.
If the rates improve and when you're eligible to refinance, you can apply to refinance. My first mortgage rate was 8.25, like on a 30-year mortgage rate.
Mm.
Traditionally, if you look at what rates are, we're still below the historic average. So you got to get rate. You got to quit being hung up on rate and look at affordability. What's my payment? Can I afford it? Because you got to step into home ownership. Until you step into home ownership, you're missing out on the biggest asset. You're missing out on net worth, generational wealth. What I've seen trending, I have a board in my office. I'm a nerd. It's a whiteboard with electrical tape for the lines where I track the title company, the earnest money, and the seller concessions.
Mm. Yeah.
Everything on my board since last fall has all had seller concessions. People are getting seller concessions. Why? Because naively, people are sitting on the sidelines waiting to get in. So there's fewer buyers. So the sellers are more willing to negotiate. Well, as more buyers start entering the market, hello, supply and demand,
Right.
the sellers aren't going to have to make those concessions, making it less affordable for people to step in because they're going to have less help with seller concessions.
Yep.
Now, there's a lot of programs out there that are low or no down payment. That's down payment. There's still closing costs. So if you can't find a grant or a subsidy, which they're out there, but they're not as prominent, and you have to be eligible for those.
Mm.
Down payment's a big challenge, and closing costs is a big challenge. And right now, sellers helping is eliminating one of those challenges.
Yeah, yeah, and so we saw this during COVID. There were no closing costs. There were no some of the advantages that home buyers are seeing now. In addition to that, like there were no there in order to purchase a home, you were competing with New York, New Jersey, Washington D.C. Folks who are coming in all cash, waiving home inspections, and since it was cash, there's no appraisal requirement. So all the protections that we always advise that buyers leverage to protect themselves when purchasing a home, those rules did not apply. And fortunately, that we've returned to what I would consider a normalized market now, which would be pre 2019. And so I appreciate that you mentioned the closing costs because that's such an integral part of historically sellers have been willing to concede 1 to 3% of the purchase price to help home buyers with getting into their home. And that's always been a pretty normal ask for a home buyer where we're presenting an offer. Hey, we're willing to offer this amount. My clients would love to make this work, but they're going to need a little bit of help with closing costs. And typically the sellers would be willing to work with them. So that is, we're seeing that too within the last 12 months, that becoming part of the conversation again, along with price reductions. We haven't seen price reductions in 5 years, 6 years. So now we're starting to see those again. And sellers are understanding, this is kind of an interesting thing too. Maybe you're seeing this is sellers are understanding that they're not just competing with other sellers, but builders are getting really competitive right now. And for the first time, I think in my 20 plus years, new construction is on par with residential resale homes because the builders have to move their inventory. They can't just sit on it. And so we've had sellers where they're just like, well, I'm going to put it on the market, and if I can get my price, great. If not, we'll wait for a little bit. Builders don't have that luxury, so they have fixed recurring costs that they have to make those payments. Otherwise, they're really in a bad position financially. So that's another great thing is home builders were actually leading the charge on getting those price reductions pushing down, and then the resale sellers are saying, "Oh man, now we're competing with new construction. This is not something that we've seen." So that from a home buyer, that's a big benefit as well, to be able to understand that dynamic to help sellers come to the table and in order to work with them. So
I love seeing price reductions. I get excited because to me that means I can advise my client, look, they just did a price reduction. So then I have a conversation with the buyer's agent like you and say, hey, Adam, do you think the house would appraise at the price before the reduction? Yeah. Well, there we go to my clients. Now you offer full price, ask that price drop in seller concessions, get your closing costs covered. That the difference in the money for the buyer on their payment is small into significant when you compare it to the difference of their cash they're outlying to get in. There's the cost of return is just so far out there. Take that cash help and run with it.
yeah, and like I said, the payments can always be adjusted if rates do fluctuate. You can always make that decision, but historically, when you look back for the last 50 to 100 years, the home prices, there may be a small anomaly in the market where there's a slight pullback or a slight reset, but it's going to continually march up and up.
Upward trend. Yeah.
It is a continual trend.
Lock in that home price. Don't wait.
Yeah. Well, what loan programs would you say right now are being underutilized by home buyers? Because you work with a wide range of clients, everything from first-time home buyers to move-up clients to veterans and investors. So you get to see a lot with the clients that you represent.
Well, there's just so many programs. Well, conventional, if your income is eligible, conventional has a lower down payment program. FHA is a lower down payment program.
So conventional is not just 20% down. Is that correct?
No,
Okay.
that's gone. What you don't really, years and years ago, you had to have 20% down to get into your house. And then greater minds started thinking like, we're really keeping a lot of people out of the home ownership. What if we come up with, well, the bank's worried about the loss of equity if they have to foreclose on it. So what if we have some insurance policy for that loss of equity on that down payment? Let's have private mortgage insurance premium, whatever you want to call it. So now if you don't have to have 20% down, you're going to pay a mortgage insurance premium, private mortgage insurance fee to cover that lack of equity. And if you run numbers on somebody who gets into a house with a minimum down payment required versus someone who waits until they've saved 20%, the person that waited till they saved 20%, their net worth will never catch up to the person who got into the home as soon as they could. Because of that asset appreciation, that net worth is growing.
Yeah, that's a great
point. There's a lot of programs. VA, I love VA. I have 2 girls in the Army, so go Army. And then state of Virginia has a program. State of Virginia has a program they just threw out there too. They have a $10,000 grant if you are veteran, military, education, healthcare. Woo! Thank you, right?
Yeah. What do people have to do to qualify for that? Just give you a call and you can walk them through that.
I lost audio.
Oh, I was just asking, what are the qualifications for that? If you're a veteran or you fall under one of those qualifications, how do you have certain paperwork that they have to submit to you, or how do they find that out?
Well, the veterans are easy. I mean, we get paperwork to document their service time to see if they're eligible. Full military is different than Guard, Army National Guard, for instance. Army National Guard, to be eligible for a VA loan, you have to have had served 90 days in wartime or 180 days in non-war time. So just because you're Army National Guard doesn't mean you're eligible for the VA loan. And then again, they have a form, NSB, NSG, whatever. We get NGB, NGB that tells us what they served if they're eligible, but we can help them with the paperwork.
Okay.
That documents their eligibility for VA loans, and then the VA loan through Virginia Housing. There's other programs if they're not a healthcare educator or one of those other fields that are eligible for that benefit right now. We have other programs that are no to low down payment.
Okay.
So again, every situation, every borrower is different, their occupation, their income, all that comes into play on eligibility for certain programs. And obviously we want to get them the best benefit and we just work through it. Which one, it's kind of like putting a puzzle together. Which one can they fit into?
Yeah. Well, what do you see as just briefly some of the one or two of the biggest mistakes that homebuyers make before coming to apply for a loan? What are some things that you would advise that they don't do?
The one that makes me cringe is when they start off the call and I say, all right, what do you have in your savings? Nothing right now. I just paid off all my debt.
Mm.
Okay, how are you going to pay for earnest money on your contract? How are you going to pay for your home inspections? Like, oh my goodness, like before you take your finances into your own hand, if you are thinking about a house, get with your lender,
Mm.
lay out your plan, the steps you need to take to get there. That plan may or may not include paying off your debt. Once you pay off that debt, that money's gone.
Mm.
Whereas if you leave it in your account and have the conversation with a lender, you may or may not be advised to pay off that debt. You may need that money to get into the house. That's the biggest cringy pitfall I hear sometimes. And the other one is that people just don't save money.
Mm.
Like you've got to think about it. Like if you're living with mom and dad right now and you're not paying anything and you're thinking, oh, I can afford a $2,000 house payment on my job. I'm hanging out in mom and dad's house, but I could do that. I'm like, great, what's in your savings account? And they're like, $20. I'm like, so you want someone to approve your loan that they're gonna trust you to pay them back $2,000 a month when you've been living rent free and you haven't saved $2,000 a month. And I'm like, oh, yeah. So think about it. If you're going to move from a rent-free situation into a house payment, have you been saving that money?
Mm.
And then if you're hourly, stop taking unpaid time off of work just because you don't feel like going in. Hourly is more stringent on their guidelines on qualifying.
Okay. So it sounds like there's going to be some adulting involved with
Yes.
moving the needle forward on this one.
Yeah, sometimes it's holding the hand and just helping, unfortunately, our schools, I don't think address this. I think it should be a class
Yeah,
taught
agreed.
at school, but laying out, take control of your money before your paycheck hits. You know what your expenses are going to be, and you should say, I'm going to take 500 from my weekly paycheck, whatever it is. I'm going to put it in my savings and leave it there. You may have to change going to Starbucks every day. You may have to stop buying all your meals out. You may have to go to the grocery store and plan some meals and have some leftovers, but
Mhm.
you're not going to start building that generational wealth if you don't start making that a priority.
Yeah, one of the biggest things that helped me, this was 20 years ago, is going through Dave Ramsey's Financial Peace University.
Yep.
And the very first thing is just developing an awareness of where our money goes. And so I got into the habit of physically writing down every dollar that I spent. And it's amazing where that money gets siphoned off to that people just don't have a clue. And whether it's like skip the dishes or, different.
I love that. We
Yeah.
did that as a couples in our church. And when I stepped out of the mortgage origination to be a stay-at-home mom. Well, the income went, but so I had my weekly grocery budget and I was writing down every item I needed to buy and I'd run about the rough price in the grocery store. And I'm like, okay, we're done. No more for the week. Like
Yeah.
that was like we were committed to having a stay-at-home mom, and that means watching our budget, and we did.
Yeah. Yeah, there's something to be said for setting the ego aside of when I was coming up, there's so much in our culture was fixated on um, keeping up with the Joneses, so to speak, and
Mhm.
folks didn't realize that the Joneses were broke. Like
Yes, they
everything
are.
was maxed out on credit cards and loans. And there was a podcast I was listening to. They said, right now in the United States, the average auto loan, car loan, is $500. And I've seen those with clients where, depending on what they're doing, they could have an eight, $900 a month car payment, depending on what they're doing. And if you take, so check this out. So if you have a $500 a month car payment over, what is it, 20, 30 years, if you were just to take that and invest that in like a 10% mutual fund or stocks and bonds, that's over $5 million that would accumulate. And that's not even taking into account, instead of putting that in stocks and bonds, if you were to put that in real estate, investing in real estate with the appreciation and the equity buildup of, because we have to look at it from this perspective, like in our world, we don't get a retirement fund that it's just going to magically appear when we turn 55 or 65 years old. It comes from investing in real estate. And the strategy that we see that works over and over and over again is that when people you purchase, if you can purchase one investment property every year, maybe even every 2 years, if you just start with that and let the tenant pay down your mortgage, as you increase the equity that you have, then you can take a portion of that equity, reinvest it in property number two, put a tenant in that one, let the tenant pay down your mortgage, take a portion of that equity to leverage to put into property number three. By the time you have 10 properties, you can get to that point where, and if you're doing 10 to 15 year notes on those, in 10 to 15 years, you start to have that first one paid off. And at that point, if you want to cash out, you can cash out. But the smart play would be, and this is just from taking a look at it, that if you were to put those in trusts and you just continue to raise the rent and the tenants continue to pay those notes down, you don't have to sell and pay capital gains or any of that. You can just set up a trust, have your kids be the beneficiaries of that trust, and it just keeps going and going and going and going. And those are things that if people want to know how that works, to talk to you about, because those are strategies that most people aren't even aware that those are opportunities that are available to them, because our world is so fixated on just simple tasks that don't require any type of imagination. And so they don't understand the financial opportunities that are there, especially if they're not working with somebody who has that experience to walk them through that. And so that's why I love the conversations that we have, because again, because of your background and your experience, that you understand the nuance and the details of how these things work, how you really can set your buyers up for long-term success, not just on one, but on the next property and the next property and the
Oh,
next property. If people choose to do that, some people just want to have one home, pay it off, and
that's fine.
and that's perfectly fine. Like if that's what makes them happy and they're content, and absolutely, that's a fantastic plan. But if they want to do more, there are strategies to do that that are proven that they do work time and time and time again. But they got to talk to you to get started with that.
I love that you mentioned that. That was my strategy when I was the stay-at-home mom, homeschooler, real estate investor. Was like, yeah, somebody's else paying for my retirement. They're paying down the debt on the home while it's appreciating. And I love that you mentioned car payment. Oh my goodness.
Mm.
Like, be smart. Like, you want a house or you want a car? What do you want? You want a nice new car? Oh my goodness. We drove a car to like a 20, what was it, a 2003 Chevy Trailblazer till I had 275,000 miles on it because we didn't have a car payment.
Yep.
That because priority wasn't driving the Cadillac Escalade. It was not, it was being able to stay home and then invest in real estate. So yeah, what do you want?
Yeah, it's again, go with the Dave Ramsey reference. People spend their lives working hard to buy things they don't want or need to impress
You
people that
don't
don't like
need.
them anyway.
Yeah, you
So
don't need it.
who cares? Like if your priorities are your family and your long-term financial freedom, it's going to require, again, setting the ego aside to understand that some things are just more important, and it requires discipline. It does require being an adult and having a long-term perspective of, it's not like we're putting this stuff off forever that you're never going to see it. It
Yeah.
just means being disciplined now. And this is, whether it's a military background or an athletics background, of understanding that just like when you're investing in real estate, or you're investing in a career, or you're investing in your athletic, uh, whatever endeavors those happen to be, it requires daily consistency doing the things that most people just don't want to do because it's not easy and it may not feel all warm and fuzzy in the moment, but that's where the opportunity really exists. So I appreciate your perspective on that because I think it's something that sometimes I want to just shout it from the rooftops and shake people and be like, there's so much opportunity for you if you can just see things
Prioritize. Yeah.
differently. Yeah, yeah,
And I love that, like when we decided that for our family, the best choice, what we wanted to do is commit to the kids and our income went, is that what meant we weren't going to go buy a new car. We were looking at building a house. We're like, nope, we'll stay in this house we're at. We're going to drive this car till it drops.
yeah.
We got in a chain of like hand-me-down clothes. So play, kids are going outside playing. Who cares? You don't need
I don't care.
expensive clothes. I'm like, oh my gosh, when do they need something decent? Christmas and Easter maybe, but so just yeah, you got to prioritize. Nothing's going to build you net worth like owning a home. Buying a car every 5 years and keeping an $800 car payment, those depreciate. You're not going to have anything to show for it, but your home is going to appreciate and you're going to build net worth.
Mhm. Yeah, and one other quick fact, I love random facts, and the other one is people often will say, oh well, they just inherited that, or they just they were born into that. And the reality is 70 to 75% of people who achieve that financial freedom, they did it in one generation, which is their own, because they were willing to be disciplined and work through and sacrifice up front for the it's really for the betterment of their kids and their family
Yes.
after them
Yep.
to be able to provide something that we didn't have growing up.
Yep.
But it's recognizing that how what a legacy that is to be able to introduce our children to a better way where they can make very different choices than we had to coming up. And not to take away from those, I think there's a lot of strength that comes from going through hard times. What's that saying, that hard times produce strong men. uh, uh, oh shoot, I'm totally botching this right now, but anyway,
What?
so when we're introduced to adversity and we work through that, it makes us disciplined and it makes us stronger. And through that strength, we create a world that is easier for our children. But then it is a cycle where our children know that comfort. So it's also important to introduce them to certain hardships so that they can understand the importance of hard work and discipline. Because when they're not introduced that, when we just hand them things, they become entitled and they think that they just deserve that because they're alive. And that's not the way the world actually works. And so when that sense of entitlement comes, then it falls back to, well, shouldn't I just have this? And then times become very hard. And
Yeah.
then
How are they going to stand on their own 2 feet?
yeah, yeah, and that's so it's there's a funny funny perspective that I've kind of developed is that the mother's role is to keep the kids alive and to nurture them, whereas the dad's role, like we really love to push our kids to push them to help them understand how much stronger they actually are than they think or that they understand. And then through that, you have both, they feel safe, loved, nurtured, and cared for, but also that strength of I am capable of so much more than what I thought that I could do. And so it's kind of that balance that
Teaching them to be independent and supporting them. Yeah.
yeah, yeah,
Our girls help build sheds, redo our deck, change the oil on the cars, minor electrical stuff. Like we want them to be able to stand on their own 2 feet.
that's awesome. That's good stuff. All right. Well, I've really enjoyed this conversation, so I
Thank
appreciate
you.
you, Stephanie, for being here. So if you want a real plan and not just guesswork, you're going to want to reach out to Stephanie. So if you're thinking of buying or selling, our team at Hopkins Real Estate Group and Stephanie are always happy to work with you and walk through this with you. Stephanie, what's the best way for people to get in touch with you to have that first conversation?
Call my cell phone, and my cell phone's the same number I had in Illinois. So it's 815 289-8778. And again, my cell phone, 815-289-8778. And I'm Stephanie Kruckenberg with Fidelity Direct Mortgage. And I have more than just the standard vanilla mortgage programs. I have creative solutions to fit the borrowers that don't fit in the traditional underwriting box.
Yeah, that's awesome. All right, Stephanie. Well, I appreciate that. Thank you again for
Thank
being
you,
here.
Adam. I appreciate you including me. Let's do this
Yeah,
again.
yeah.
Another
No,
topic.
my pleasure. This has been fantastic. So thank you
Great.
everybody for
Let's go, people. Let's start talking. Let's have a conversation. Let's get you into a home.
yeah, and be sure to follow us. And if you're finding this on YouTube, feel free to subscribe if you like, or just check back periodically, whatever works for you. But thanks for tuning in and listening and being part of this conversation. And also, feel free to reach out to Stephanie and myself if you have any ideas or questions or thoughts for future episodes, things that may be useful. That we can explain a little bit differently or from a different vantage point, we'd be happy to do that too. So, and also feel free to share this with your friends or anybody it might be useful for. So all the best to you. Stephanie, again, thank you. And
Thank you.
all you guys, make it a great one. And we will talk to you on the other side.
Thanks, Adam.